All right, let's dive right in. Today, we are taking a close look at a massive financial showdown happening in the Middle East. We're pitting three of the most powerful stock markets, Saudi Arabia, the UAE, and Qatar, against each other. We're going to see what makes them tick, what really sets them apart, and, what it all means for anyone looking to invest. But first, let's just kick things off with a number that'll really grab you. 2.93 trillion US dollars. That is the huge projected value of the Saudi stock market alone come 2025. A figure like that really sets the stage for the incredible scale we are talking about today. Okay, so let's meet the main players in this regional clash. To really get a feel for the Gulf's financial landscape, you've got to understand what makes each of these markets so unique. And we're going to start with the heavyweight champion of the region. First in the ring, Saudi Arabia's exchange, the Tadawul. Now, it's not just big. It is the most liquid market in the whole region, which basically means it's super easy to buy and sell stocks. And its entire future, its whole trajectory, is tied to this incredibly ambitious national project called Vision 2030. That's the kingdom's master plan to move its economy beyond its deep roots in oil. Next up, you've got the United Arab Emirates, which is really the region's diversified business hub. What's interesting is the UAE actually has two major exchanges, one in Dubai and one in Abu Dhabi. And unlike its neighbors, its economy isn't just about energy. It's really fueled by global trade, a massive tourism industry, and a real estate market that's just always buzzing. And rounding out our trio is Qatar. The best way to think about the Qatar Stock Exchange is as the stable energy giant. Its market is built on the country's enormous natural gas wealth, which has helped create this almost fortress-like banking sector. It's got a reputation for solid, reliable companies that pay out consistent dividends. So now that we know who's who, take a look at this. This chart just lays out the sheer difference in scale. And wow. Saudi Arabia, projected at nearly $3 trillion, just absolutely dwarfs its neighbors. The UAE is next at a very solid $1 trillion. And then you have Qatar with a market that's smaller but much more concentrated. This visual just perfectly frames that regional pecking order. So we've got the who and the how big, but what's really going on under the hood? What are the key forces driving these markets that every investor really needs to get their head around? When you talk about the Saudi market, pretty much every conversation starts and ends with one thing: Vision 2030. You can think of it as the country's roadmap to a new future, diversifying away from oil into things like tourism, tech, you name it. This plan is kicking off a huge wave of major IPOs, and it's completely reshaping the investment landscape, pulling in a flood of new money from all over the world. Now, the UAE is a totally different story. It's all about being plugged into the global economy. Its markets are kind of like a thermometer for the world's economic health. When people are traveling and trading, the UAE is booming. It's also seen this really fascinating shift from the inside, with a younger generation of investors who care a lot more about ethical investing, especially Sharia-compliant options, which are investments that follow Islamic principles, like avoiding businesses that deal with interest. And then there's Qatar. For them, it really all comes down to energy. The price of natural gas has a direct line to government money and the health of its huge banking sector. This creates a much more predictable, stable environment, which has made it a real haven for investors who are looking for steady income from high, reliable dividend payments. So let's put it all together. This table is a fantastic summary of everything we've just covered. You've got Saudi Arabia offering just massive scale, but, it's still working on breaking its dependency on oil. Then there's the UAE, which gives you that diversification, but it's also more vulnerable to big swings in the global economy. And finally, Qatar offers that energy-backed stability, but the trade-off is a smaller market that's not quite as liquid. Okay, enough with the big picture. Let's make this personal. The big question is, what does all of this actually mean for you? We're going to break down how you can find the market that lines up best with your own personal investment style. Think of this as your cheat sheet for figuring out where you fit in. If you're an active trader, someone who's in and out of the market looking for volume, then the deep liquidity in Saudi Arabia and the UAE is absolutely where you want to be. For long-term growth investors, the game-changing potential of Saudi's reforms and the UAE's diverse economy are just incredibly compelling. But if your top priority is stability and a steady paycheck from your investments, then Qatar's profile of stable, dividend-heavy stocks is a much, much better fit. All right, so you might be sitting there thinking, okay, I have to choose one, right? Well, not necessarily. In fact, the smartest play here might be to combine them. And this, right here, is probably the most important takeaway from our entire discussion. Combining these markets into a single regional portfolio can be a seriously powerful strategy. It lets you use their different strengths to cancel out their individual weaknesses, creating a much more balanced and, frankly, resilient way to invest in the Gulf. And this visual just nails the concept perfectly. You can use Saudi Arabia for its pure scale and access to those huge IPOs. Then you blend that with the UAE for its economic diversification, that buffer against the price of oil. And finally, you anchor the whole thing with Qatar for rock-solid stability and those reliable dividends. Together, they create something more powerful than any one of them alone. So this all brings us to one final huge question. All three of these nations are on this historic journey away from oil dependency. The race is on, no question about it. But as they all build these new economic identities, which one of these markets do you think is going to be the one that truly defines the financial future of the entire region?
Please like and subscribe for more trading content, and then subscribe for more daily, weekly trading insights.